In the previous clip, in year 1, Ain records both an actual bad debts of 200 and her first ever provision of 400 to ensure her statements reflect a fair value of receivables. 19,600, taking into consideration the real bad debt as well as the estimate of the future loss. We are going to continue with year 2 effect of the adjustment as well as year 3. So let's continue and see what happened in year 2 and year 3. Read further. In year 2, Ain's credit sales increased. Her trade receivables now stands at 30,000. She maintains her provision rate at 2%, and we need to recalculate what would be the new provision for the current year. %, which is maintained, and then times with the net receivables as per given in the question, 30,000. So the new provision for second year is 600. What about the previous year? The previous provision was 400. So the difference is 200 increase of provision. So how do we record this in our journal entry? Remember, provision is always credit. So if you want to increase it, so you follow the normal entry, which is also credit. So you remember, if there's an increase, it will be considered as an expense, which is also a debit by nature, and the effect will also increase this time around. So according to the rule of recording, you follow the normal entry here. So our adjusting entry for 31st of December will be debit statement of profit and loss with the increase of 200, and then credit the provision for the year with the increase of 200. So what will be the effect of the transaction? We can look at it on both extract of statement of profit or loss under expenses because of the increase. Take the amount, the difference between the 2 years. As for the statement of financial position, extract for year 2 under current asset. Since the information is available, trade receivables of 30,000 less provision of doubtful debts. The second year, this is where students normally make mistake. Do not take the difference, but take the latest provision, which is 600. So your net receivables will be 29,400. This is for year 2. What about year 3? Let's look at what happened in the given information. Now, I will introduce stricter credit policy. So, because of the strict policy, fewer credit customers were accepted. Collections improved significantly, but the rate of provision maintains at 2%. But the formula for you to calculate your provision still the same, meaning we're going to use the rate, new provision, 2% times with net receivables given by end of the year, 15,000. So you get 300. Compare with the previous year 2 provision, which was 600. The difference between the two is 300 drop of provision. So if you remember, we mentioned earlier, the drop will be considered as another income. Income will always be credit. So let's report the adjusting entry with the understanding of other income, where the accounts of provision, normal entry, which is always credit. And since other income is also credit, let's check on the effect of recording this transaction. The provision will be lower because there's a drop from 600 to 300. As for the other income, it will be higher because previously it was an expense, but now it is other income. So because of that, our journal entry, based on the rules of recording, we are going to contract the normal entry. And as for the second one, we're going to just follow the normal entry. So the adjusting entry of this transaction will be debit provision of doubtful debts of the difference of 300. And then credit statement of profit or loss reduction by 300 and so on. So now let's look at the effect on our financial statement in year 3. Since this is other income, it's no longer will be shown in expenses, but it will be under the subheading of other income. Reduction of provision of doubtful debts. The difference of 300. That's how you show it in the statement of profit and loss. However, again, I normally remind my students that the one that will be shown in statement of financial position is not the difference, but it will be the balance, the closing balance of the provision. So since we are given the information on the trade receivables for year 3, of 15,000. So we'll put it there. And don't forget, we need to minus the latest provision. The latest provision was 300. This is the latest year 3 provision, not the drop of provision from year 2 to year 3. So be very careful. And with that, the net receivables will be lower by 14,700. That's how you show the provision of doubtful debts changing each of the year, as well as the effect on the statement of financial position. At times, it will increase when the credit sales grow, and at times it will decrease when the receivables improve.